What's going on, traders? Hope everybody's having a great weekend. Happy Super Bowl Sunday. Gonna do a quick analysis here of the E-mini S&P futures as well as the NASDAQ 100. Gonna go over some daily levels, some weekly views, and of course we'll get a little bit granular and take a look at some day trading levels as well. As a reminder though, of course, this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. All right, let's also take a look at the economic calendar for this week, as we do have some important data that we want to be cognizant of. So let's go ahead and do that. All right, Monday, nothing scheduled. Tuesday, the 11th, looks like we got some Fed speak going on here. We have Cleveland Fed president right before the bell opens at 8:50. Powell testifying to Congress at 10 o'clock. San Francisco Fed President Daly speaking at 10:20. Then we have New York Fed President and Bowman both speaking at 3:30. So Tuesday, watch out for that. Wednesday, though, is going to really be the most important day as far as the data is concerned. We have CPI coming out at 8:30, so that should be a market mover. And let's see what those numbers are. And then later in the day, more Fed speak with Powell continuing to testify to Congress at 10 o'clock. Then we have President Williams speaking at 3:30, Bostic at 2, and Waller after the market is closed at 5. Core PPI coming out at 8:30 on Thursday. Initial jobless claims, be paying attention to that as well. And Friday, Valentine's Day, we have what do we have here? Retail sales 8:30, and nothing really too major there. I guess Lori Logan, Dallas Fed president, speaking at 3. So that's what we have. PPI, CPI really going to be the big events. And I also saw over the wire that Trump is speaking about potential naming some countries with some more tariffs this week. So watch out for tape bombs as well. And you don't want to get caught in a trade without a stop when he says something about tariffs. Okay, so let's get into the weekly chart here on ES. And really, I did this on the daily, and you can really see this illustrated pretty well here, that overall, right, we are in a balance, right? The market is just moving sideways. We're not continuing to make any new higher highs recently, or really any significant lower lows. So it's range bound. Definitely want to be a little cognizant of this potentially turning into a distribution. Of course, we're not going to know unless we start to see some weekly candle closes outside of the structure that we have now created over the past, basically the year. I mean, it really hasn't gone anywhere significantly. Is it just building up pressure to make a move down or lower once again? Well, we will see. But really, from this weekly view, you can really clearly map out a balance zone here, a range, and you'll know when this structure is broken which way the market is intending to go. I will say we did cool off on our overbought, oversold indicator here, so we have a little bit more room on the weekly, and we're not in that spicy territory just quite yet. So that would definitely give a little credence to the bulls here. And, just from the moving average, point of view, we're still holding the 20, right? So unless we really start to see some weekly closes underneath that 20 on the, it's all as well here in bull land. But I still would be a little bit cautious overall and just know what kind of environment that we're in right now, and that is overall sideways. So nothing really to say about the weekly candle here. We did close marginally above the weekly 9 at 6,023. So I'll be paying attention to that. We're about 20 points over that. So if we start seeing some daily closes once again under that 60.23, I think that that could show a little bit of a sign of potential weakness starting to come back into the market, and maybe we'll go ahead and test that daily or that weekly 20 once again. All right, let's get into our daily chart. And here I'm going to find the range. Where the hell is it? Okay. Here on the daily, you can really see this balance now as well. And, you know, from this point of view, I'm going to use about that 59.90 right here as kind of a bit of a pivot, right? If we start to see daily closes or moves underneath this level, it would be very likely, in my opinion, to go ahead and try to test the lower part of the yearly balance that we've kind of established here, that I have mapped out. So, and it's going to be hard to see a new high, right, unless we start to see those daily candles start to close back up above 61.15, and really it's got to be 61.60, right? We start seeing some daily closes, then we'll get a way better idea of the next move, and you know that would be potentially, of course, 6200's not that far away, but you know, from the daily or weekly perspective, of course, we'd probably look up another 100 points or so. So until that happens, range bound we will stay, or if we start seeing price move back underneath, I guess we can say we've got 58.10. So really probably 5800 would be the nail in the coffin for the bulls. But until then, I mean, we could even trade down into this lower part of the range, and then maybe, you know, this is where we would want to look on that contrarian move and look to go long. If we do come back, this 59.90 could also be supported if we do see a move down like this. We could see a potential setup for a swing trade back up into 6100, 61.15 area, and then see what we can do about getting towards the real highs of the range once again. So got a little blueprint there, and I think that is helpful to take a look at. All right, let's take a look at our other daily chart that we have been working with so far and see what we've got from this perspective. All right, so from the daily here on this chart, you can see we could not get over, right, the highs from back in middle of November, and this is going to be key. This kind of formed that right shoulder that gave us this quasi breakdown in the start of January. But now, of course, you know, we rallied back up, tried to break back over, and this has just been kind of more or less still, you know, pretty choppy, right? We're not really seeing any true direction, so to speak. We did close below the 9 and the 20 here, so that is worth noting. The 20 on the daily sitting at 60.56, so I'll be paying attention there. And they're pretty close. The 9 sitting at 60.70, so 60.69, so I'll watch that as well. I think as long as the bulls are unable to get over 60.80, you know, I'd have to raise some caution. Really need to see some daily closes back over that 60.83, 60.80, and ideally really the 61.10. That would be nice to see for the bulls. Some nice candles like so, and then we can go ahead and look at attacking back towards the all-time highs. But as long as we stay underneath here at 60.80, we can consolidate and potentially set up for some type of a bear flag, and then potentially come back down, retest maybe the figure at 6,605. I'll be watching that as well. if we do start to see this come down. So I think it'll be interesting. We'll look at what Globex does. It opens up at 6, but certainly I would say under 60.60 would still raise a bit of caution for me, and we'll look for lower prices on the daily chart. All right, let's go on. I don't think I have anything else for ES here. It's just these days, we get these take bombs, look at these long wicks, and then come back. It's been a bit choppy here. So pick your spots, and it's not really a time to overtrade, and wait for that time where we start to get out of this range that we are in. All right, let's take a look at some daily chart levels here and get a little bit more granular. Okay. All right, below the hourly point of VPOC here at 60.75, starting to get some crossover on the 9 and 20. And we did close below this minor pivot here at 60.53. So we're gonna see, I would think that we stay above it, or we try to get back above it. I could even see, if we start seeing, maybe looking for an hourly close over 60.55, we'll probably go back and retest this hourly VPOC sitting at 60.75, 60.73 area. But watch out, we do have the hourly 200 starting to cross right underneath the hourly 9, and both of those are at 60.65 thereabouts, really close together there. So that may be an additional headwind that stops us from getting all the way up into that VPOC. But it's pretty close. It's about 4 points difference there between those moving averages and the volume point of control. All right, the other thing here, so as long as we stay underneath, and if we don't see that retracement, right, say we stay underneath the 60.53, it's very possible we trade back down, value area low here sitting at 60.27. I could see that hitting, or maybe even doing a little bit lower into the 60.20, and that can be a spot for potential bulls to come in. You can see they had some reactions right here on Tuesday. This shifted the structure, gave us a big move, so there definitely could be some bids there that would want to step in at this key area. Under 60.20 though, probably go back to the 6,000, 602 or 60.02 as we mentioned before on the daily chart. So that's going to be important as well. If the bulls, in fact, can get back over, what could get this looking a bit better on the hourly from that perspective? Well, certainly getting over the VPOC is going to help at the 60.75, 60.73 area, but really need to see over 60.85, 87. If you want to be safe, you could even say give it 3 more points, 60.90. Have to get over there for a chance to come back to 6,100 basically. And after that, there's still a lot of traffic here. You can see there's congestion that we built up. So, and it's quite a bit of volume as well in this area. So I think it's very possible that if we do start to trade up in this area, we start to lag out. And you can see it here, it did the same thing, right? And it kind of had it here as well. So it's a high traffic area here, and we could just end up getting stuck while we wait to make a decision one way or another. We got to get over for the bulls, got to be really over that 61.15 here and see some closes and acceptance like so, and then we can attack these highs once again. So this, the counter trend trade for the retracement, it's certainly there, but I would still be cautious because truly, from the hourly view, unless we're over the 61.15, it's going to be a little bit tough to go ahead and come back to the highs. All right. We'll say on the hourly though, starting to show a little overbought. Excuse me, oversold. And VPOC right here on the 4-hour. Kind of where we stop there. So I think that'll be worth keeping an eye on. What is the price? It is 60.45. So watch that as well. I think we start seeing under there. We got the 200 target right now. That 4-hour 200 is right at 60.20. So we could head there, and that might be a real nice spot to attempt a long trade. But we shall see. All right, let's move on to NQ. Okay, well, I'm already on it, so might as well just stay on it. Again, very similar situation here on tech. We briefly made that higher high. Of course, it didn't close over the week over it, but this is balance here. And for me, for NQ, I'm going to use about this 21,462, 465 area as my pivot. So we stay above that. We'll look to attack the upper part of the balance, 22,000 thereabouts, and maybe 22,125, right? So if we start to see some daily closes back underneath 21,460, I'll be a little bit more cautious and looking more towards the downside. We are still holding the the weekly 20 very nicely, and the 9. And we're not really oversold, although momentum, it seems kind of a little bit of a, I don't know if we can call it a divergence. Maybe only a divergence here for the bears in the sense that the trend is up here and we have this like this. But this obviously is no trend. So slight divergence there. I think that's a little interesting. Let's see here. Now both the closes on the ES and the NQ, I know we closed below the 9 here on the daily on both, but it's a non-committal to me because we're too close to them basically. We did not really confirm a break. Now if we see another day closing, and especially if we close below this 21,460, I'll get a little bit more optimistic that the bulls are starting to, that the bears are starting to gain some steam. But as it stands, I'm not really reading too much on being below the 9 and 20 just yet. The 20 is only 25 points away. So let's take a look at our normal daily chart. What do we have from this view? God, chart just looks so, these wicks are out of control. All right, so now we are in this demand area here, slightly below 21,635. We want to see it back over there. The 9 is sitting at 650, 645, so it's right in that area. I think that would seem a little bit better for the bulls, but even then we are stuck right between this big supply on the daily as well. So what do the bulls need to see? We need to start seeing some daily acceptance over 21,900. That probably give us another 100 points up to the 22K. Over the 22K, 115 basically, and we'll just look to match these highs from at the end of December and the end of January right here. So need to see price hang out up here for that opportunity to come back. and touch once again. We could get trapped and trade here between 21,900 to 630 basically. So just check out the highs from, what is this? Yeah, 1111. Staying underneath 21,630, I would probably look for lower prices, about 21,469 in that area. You know, we have a couple of wicks there, so be cognizant of that, but I think that that's possible. Maybe about 40 points lower if we bring into the wicks. We start seeing daily closes underneath 21,470. I will be looking basically to below 300s, 21,313, that area there. So anything under that, we'll look to attack into these wicks here, closer back to 21,000. I personally think that we're going to end up probably getting stuck and trading like so for a while. I guess you could say we do have kind of a bit of a rounded, you know, are we trying to create a new buy side curve here? It's possible. Even if we trade down, you know, in this area, and then just, you know, I'm just squiggling in for price, you know, and then we drift up like that. So that could happen. So I do like that look at the curve a bit. It's not bad. All right, let's get into some day trading levels really quickly. Okay. Hourly closing under VPOC here. Under the 20, or excuse me, under the 200 SMA. So I'm paying attention to see if we stay under that 200 here on the hourly. It's sitting basically at 21,600. So we only closed 20 points or so below it. But I think we'll fight here. You know, if I was to be looking at this right now, I would be thinking that it could be a potential long here off of the 21,570s. I mean, if you're really looking for that confirmation, it's got to be over the 21,600. But bounce up, I would think we could get a counter trend into 21,650 area. That being a possibility. Give these moving averages a little time to catch up. Like so. These catch up like this. We come back, retrace into it. Boom, maybe possible short from that spot. So that could work. Or if it does break over, price moves up into 21,650 and gets over. Just wait for that displacement higher high, and then we look for a retest and a long. Back up into 21,700, 21,720. Maybe it gets stopped. We got these little wicks here. Oh, that's about 700. So that's what I'll be looking for. If we see that acceptance, then I'll be looking a little bit stronger to the case of the bull trade up. But also be cognizant coming into CPI this week. Yeah, it could get trapped right in here. Could get trapped right in here. So, but these are still areas, I mean, this is tradable. It's not. You definitely can still make some money in these ranges. You just have to be a little bit more tactful and not overstay your welcome. What do the bulls really need to do? Over 21,720. Be looking, see some acceptance, then we'll be looking a lot better. Probably head back up about another 60 points or so. 21 800, 21,825. I think that that's a possibility. We start seeing that acceptance for the bears underneath 21,570, certainly under the lows, under 21,550 from Friday, then I would say we would look for more downside into 21,500 and 21,450 down here by the lows from Wednesday, the close on Wednesday. So, and that spot could be a long. So we got right there. Some reactions here as well. So pay attention for that. All right, so got a little plan there for the NQ, long and short. Let's see what ends up happening. All right, I'm gonna just run through these very quickly, but we'll be back on track next week here. The yield curve is coming down a little bit. Okay. All right. Now, how many stocks in the S&P are trading over their 50-period moving average? Coming right into that critical 50% area here. So we did actually come up and try to get over it, but we hit this trend and it said no, and now we're coming back down. So is it possible that now this was just a lower high being put in? Well, as it stands, it kind of looks like it, right? So if this continues to stay under the 50% and continues to roll, well, watch out. That might not be the best sign for the market. And the 200 period moving average, you can see that we were in that range for a while. And of course, this is a slower moving data point, but we just came up and retested the lows of that range and came back. So to me, this is the one I pay attention to a little bit more. So some small cracks under the hood there. Let's look at the new highs versus new lows. All right, I mean, it's over the zero line, not by much. It's at 4. I'm gonna take what we can get there. Oh, okay, skew still saying volatility. What's the dollar doing? Well, if it holds over 108, I think we're gonna see the dollar start to rise up once again, maybe about 50 cents or so. 108.50. Yields are looking better, I will say, kind of a little head and shoulders here. As long as we stay underneath 45, I don't have an issue. And really under 46 as well. So those all can just be lower highs being put in, unless we start seeing it back up over 45 is going to be a little bit of a warning. Over 46, and then we'll be talking about looking at the highs again. But this looks a little constructive, and I think the bonds, are also reflecting that. Did we hit the 91 yet? No, we didn't. Okay, this is good though. We have our 7-year and our 30-year ratio starting to move under the 50. This is constructive. I'm going to extend this trend here, the 7-year. Let's see. Does it come back, retest, and then head back up? And let's look at TLT here. All right, so the bonds, I mean, as long as they hold over 88.42, looking still okay for 91.80 area on TLT. Anything on the put call ratio? No. VIX is back over 15, thank God. As long as it holds over 15 and 15.75, can see another spike in volatility. And that's about it. I'm not going over everything today, just a quick run through, but we do have some levels that we are watching coming into next week from the daily chart perspective and for our day trades. So I think we are set, and I hope everybody has a great rest of Super Bowl Sunday. If you are out at parties or a bar, don't drive drunk, call an Uber. And also, go Birds. Okay, guys, have a great one. Thank you so much for taking the time to prep with me for the upcoming week. Should be interesting with the data and Trump talking about more tariffs, so we have to be careful. And remember what we say at the end of every video, a prepared trader is a profitable trader, so make sure you plan your trade and trade your plan. Thanks so much for joining. Really appreciate it, and take care.